Good afternoon, and thank you for joining Campo Invest's online investors meeting. This meeting follows our 9-month earnings announcement, which was announced last Sunday on 8th of November 2020, and it's in line with our efforts to enhance transparency with all our stakeholders, and mainly shareholders, bondholders, as well as analysts. I'm Mustafa Zantoud, Director of Marketing and Investor Relations, and with me in the meeting are Mr. Faisal Sarko, our Chief Executive Officer, Bobadr, and Mrs. Hana Taha, Chief Financial Officer. We will be covering a brief introduction on the company and an overview on the events that took place year to date. Then Bobadr will take us through the company's business and financial performance, and then finally we will close by answering your questions. Should you have any questions to raise, please use the Q&A icon, and we will be more than happy to answer them at the end of the presentation. I would like to inform you that the presentation will be available under the Investor Relations section on our website, www.campoinvest.com. Campo Invest is a regional non-banking financial powerhouse. We are part of Kipco Group, regionally available in Kuwait as our headquarters, UAE, Saudi, in addition to Turkey as rep office. Our business lines focuses on 3 main business sectors: the asset management, including fund management, portfolio management, as well as advisory, investment banking on different parts of the investment banking scene, the equity capital markets, debt capital markets, and mergers and acquisitions. Furthermore, we have the brokerage, which is managed through our subsidiary, Ula Wasata. In terms of asset management, our total AUM has reached 12.6 billion, which places us among the top 5 players in the GCC region. In terms of investment banking, since inception in 1998 till September 2020, we've almost finalized deals worth around $23.1 billion. To serve our clients, we have the basement power, which Bobadr will discuss in a minute about what we've done year to date in terms of raising capital, our regional footprints, whether we're talking about our regional offices or the clients we serve on regional level, our insight, mainly supported by our research track record, which goes back to, we have some funds that started back in the year 2000 with good track record, as well as our client-driven approach. If we look at the past 9 months, I think 2 things have shaped the market. One has been the COVID-19, where all markets have been affected, businesses negatively affected, as well as several measures were taken by government, whether we're talking about curfews or lockdowns, border closing, and what have you. On the other side, we have the oil market. We've seen the oil market drop during first quarter by around 65.5%. Q2, it went up like 81%. Q3 went down, and we ended up the 9 months down 38%. If we look at the capital markets, all markets were drastically down during the first quarter. They started picking up second and third quarter. Nevertheless, they are still in the negative. If we zoom in on the region, we look at MSCI GCC market. It was down around 30% in first quarter. Second quarter, third quarter went up, but closed down 8.8%. If we look at Kuwait, similar situation, but regarding the 9 months, it was down over 13%. I'll move down to Bobadr to take us through the business and financial performance during the past quarter and year to date.
Thank you, Mustafa, and welcome everyone to our second quarterly presentation. Of course, if we have a quick snapshot look at the strategy and accomplishment during the 9 months, of course, with the beginning of the pandemic, we had to analyze several scenarios, measures to be studied and taken in accordance with what the government regulation and the impact of those decisions on our business continuity. So devising a strategy, which for us, we highlight here in 4 pillars that are mentioned in the circle that you see. Of course, the primary goal was to maintain the health and safety of all employees, who are the company's most important asset, safeguarding the interests of all our stakeholders to make sure that we bypass this stage with minimal damage, guaranteeing or ensuring that our readiness is complete for return for full activity after the passing of this stage, and of course continued commitment to our social responsibility, providing support and guidance and help where needed. Of course, during the 9 months, very quickly in terms of what was accomplished, we were proudly able to provide uninterrupted services to our clients, achieving a number of milestones. So if we look at raising from attracting new investments from our clients, we were able to raise over $148 million. We distributed $39 million through capital distributions and income distribution. Our equity funds and managed portfolios continued their performance, outperforming respective benchmarks. And in actual fact, 3 of our funds were recognized by the highly reputable Lipper Awards, the Refinitiv Lipper Fund Awards for 2020. In addition, during this period, we completed the acquisition of 2 income-generating property portfolios in the US and UK, which made our managed real estate assets under management value reach over $1.2 billion. Also, during that time, we successfully exited 2 managed US properties, generating above target returns to our clients. We continued exit negotiations with several parties on behalf of clients for ongoing mandates that we had. We launched a strategic initiative supporting companies battling this ongoing crisis, signing new mandates. We played a role as a joint lead manager for 3 debt capital market transactions for a total. Those transactions in totality were $1.3 billion. 2 of those were regional offerings in US dollars, and 1 of them was for a local bank in Kuwaiti dinars. In addition, we played a role on an exclusive sell-side basis, advisory role for a healthcare group in Egypt. Our subsidiary, Ula Wasata, the brokerage side, our brokerage arm, continued its services uninterrupted, was able to increase its market share as it went along, and attracted new clients on the online trading platform. Of course, if you look at the asset management trajectory from establishment in 1998 until now, we still stand at a healthy double-digit compounded annual growth rate, CAGR of 12.6. We stand at USD $12.6 billion, which is 3.9 billion KD. Of course, here you see a couple of major highlights: the 2008 international crisis and its impact, and of course, the acquisition of the majority stake in Global Investment House and the merger towards the end of last year. And where we stand today, of course, you see a bit of a drop because of the impact on the AUMs, especially the liquid ones for the market that we've seen in the past 9 months. During the pandemic, I'd just like to shed a little bit of light because there's a lot of effort that is being put by the organization to ensure continuity and successful achievement of targets and accomplishments that I mentioned. Of course, we're pleased to say that our workforce remains in good health. We have extensive measures to encourage prioritizations for people and making sure that we achieve our objectives while maintaining this very important factor for us from a human resources side. We remained fully operational remotely. We had certain employees available at the premises from time as needed, and now we're stage 4. We're back into a mode where we are here, but if always being careful by mixing the need for remote working and working in the premises of ours. From a technical resources side point, of course, our technology resources remained active and available during the entire period. and until now, and moving forward, hopefully. Remote access was ensured and provided where required, emphasizing, of course, the confidentiality of the stakeholder information where needed. During this time also, we took this opportunity to expedite our digitization drive, which was part of our strategy post-merger. And this is a key for our moving forward. And this is an ongoing process, and we'll start to show stakeholders more and more of this as we move along in the coming weeks and period. From a financial resources side, and you will see when we talk about the numbers, our sufficient liquidity, which enabled us to maintain our operations as usual and be able to be opportunistic where need be and operate at the highest standard that we operate at. Of course, the company continued to generate fee income from core activities, impacted a little bit, as we will explain later, but still moving in a strong way from a fee income side. Of course, from an expense side, we continuously review various items of expenditure and rationalization as we preserve our financial resources, and you will see also the results of that in the 9 months analysis. Okay. So I think I'll be speaking part, and of course my colleague Hannah maybe should start the discussion, and I'll add in where need be on the performance at a glance. Please, Hannah.
Okay. Thank you, Badr. Thank you, everyone. For Q3, 2.5 million net profit and 1.4 million loss for 9 months Y2D. Slow of business affected fee income, drop of 18.7% in Q3 and 9.4% in 9 months. Total income impacted by market performance. General expenses down 17% in Q3 and 28% 9 months, and this is a very positive result for us. Total liability dropped by 13.9% in Q3, but if we compare it with December 19, it is actually increased by 19.9%. Here, total income dropped by 38.6% in 9 months, impacted mainly by unrealized loss for our prop book investments. A positive start for the year, fee income increased by 16% in Q1 2020, but slow business affected fee income in Q2, and Q3 a drop of 9.4% in 9 months. For the slide of expenses, general and admin expenses dropped 28% during 9 months 2020. General and admin expenses to fee income dropped from 1.07 times in 9 months in 2019 to 0.85 times in 9 months 2020. 9 month net loss of 1.4 million impacted by financial market performance. Q1 loss was 4.6 million, Q2 profit of 0.7 million, Q3 profit of 2.5 million. For financial position, total assets increased by 6.4 million since December 19. Cash and cash equivalents represent 32% of the total asset. Investments to total asset 41%. For shareholder equity, company distribute 1.7 million KD cash dividend for the year ended 2019. This has happened during 2020. Total liability reduced by 14% in Q3 2020. Shareholder equity stand at 51.7 million. And owner equity to total asset 37.5%. December was 43.6%. Net debt to equity 0.39 times. And credit rating BBB long term and A3 short term stable outlook. Thank you.
Thank you, Hannah and Badr. We've received a couple of questions from shareholders or attendees. One is, what are the main transactions that have contributed to the fee income during the 9 months? Whether?
Okay, I think during my mention of some of the accomplishments, our fee income is based, as was mentioned, on 3 pillars, which is the brokerage, which has continued to perform because the markets were open, and with the MSCI inclusion, you have extended volumes, which helps the brokerage side to achieve additional income. On the asset management side, of course, we launched 2 new real estate projects, despite the fact that we've also exited a couple of projects which reduced the AUM, but also generated the fees through entering into 2 new real estate transactions, in addition to the 3 IB deals that were mentioned, and the 4th one, which is the M&A. The 3 are in the debt capital markets, the debt transactions, totaling $1.3 billion, and the M&A transaction in the healthcare sector in Egypt. Those are contributors, of course, to the fee income generated during that period.
Regarding the debt, there's one question about the increase in debt since the beginning of the year. What's the reason behind that?
Of course, if I may answer this question, you have to keep in mind that part of our core business requires us to have liquidity, and we ensure that we have ample liquidity given the circumstances that are there. And this has positively impacted our growth of AUM and recurring fee income, as you see from the accomplishment that were achieved, maintaining a good cash level. Of course, the increase of around 16.7 million in loans and cash equivalents, which totaled around 15.3, and a net debt to equity ratio standing at 0.39 times.
I think you've mentioned the expenses, drop in expenses. One question came about the reason behind the drop of these expenses.
Yes, expenses actually dropped by 28% in 9 months ending September 2020 compared with September 2019. Company took several measures to reduce the cost and to look and to cope with the market condition due to COVID-19, and also company's strategy post-merger completion.
Another question we received, did the pandemic give you the insight that will lead to structural changes in the way you conduct businesses?
I think it's an ongoing process on how you look at the structural changes, because when the pandemic hit, of course, in March and April were critical periods of re-looking at budgets, and I think this comes across the board for all companies that act in a professional manner. You re-look at your expectations for the year, and if I look backwards towards that, I would say that those expectations were more severe given the severity of the situation. However, when you look at the business lines we're in, when you talk about asset management, you're talking about the management of client assets, whether it's in funds, whether it's in DPMs, whether it's in specific areas like real estate, and investors require demand. They shift their requirement from one area to the other, but of course, we always look at what meets the requirements at the moment we're in, what needs to be addressed, and how we can address this from an asset management side. And on the investment banking side, of course, there was more focus on looking at advisory and restructuring as companies start to investigate and look at how they can deal with the pandemic in the short term, medium term, and their business models in the long term, which have a financial impact. So our business was ongoing, and of course, the brokerage, if you see, the market has grown in volumes as the inclusion to the MSCI nears, has been ongoing, and brokerage is a needed service in the market.
Okay, last question we received, are there any plans for launching new services in the market?
Yes, I think, of course, we have to be cautious about talking about future statements being a listed company, but we continuously look at launching new initiatives and new ideas. One of the things we are looking at is the market making aspect, given our experience, our team, and our capabilities and performance in the equities side. So looking at the market making aspect, we're also looking at a new product that we aim to launch early in 2021, which is in the alternative space. And this is something we look forward to, something that we believe meets the needs of our investor base as we diversify and provide new and innovative products to them. In terms of services, of course, what was mentioned earlier, the digitization drive is in high gear, and we'll start seeing the results of that in the coming months as we start becoming more nimble, flexible, and meeting our digital footprint requirements that our clients expect us to be at.
Thank you, Badr. I think we come to an end. Do you have any closing remarks before we end up the session?
From my side, I'd just like to say thank you for those attending. We aim to continue to be transparent with our results. We are operating as a professional investment company that has a regional footprint, regional and international client base. We aim to grow and achieve our objectives for all our stakeholders. And I just want to say at the end that really it is a difficult time. I mean, the COVID situation is not over. We still have the issue of vaccinations, etc. And I think I just urge everybody to adhere to the requirements of distance and wearing a mask and staying safe and protecting our young and elderly from this dangerous pandemic.
Thank you, Badr. Thank you, Hannah. And thank you everyone for participating. I just want to remind you that should you have any queries on the investor relations part, you could visit our investor relations section on the Campo Invest website, campoinvest.com, or you can send us an email to the investor relations team on investors@campoinvest.com. Thank you, and hopefully we'll meet you again in the upcoming results announcement. Thank you.
Thank you.
Thank you.